I'm going to do this very short introduction and welcome. It's going to take about 20 minutes, maybe a bit less. I'm going to hand over to Richard Ching. So we're going to do Q&A after that. So hold your questions if you don't mind, and we'll do Q&A after the first two slots, just before we break for lunch. Okay, so this is really about the context for Hammerson, because many of you are interested in Hammerson securities, writing about them, thinking about the evolution of the stock price. So the first section is really putting it in the context of our business and how it fits in with our strategy. And as you know, we're the only European real estate company with a significant outlet position. You can see that from the pie chart in the top left. So getting on towards 20% of our business is in outlets. So if you want to buy shares, publicly traded shares in an outlet business in Europe, you only got one choice. And that's obviously very good for us, very valuable to our business, and very powerful and valuable to our shareholders. It's been there for a long time. We are shortly going to celebrate the 20th anniversary of our relationship with Scott Malkin, Duncan, and many of their colleagues when we first invested in Bicester Village, beginning of 1998. So the longevity of the relationship is very important. It allows us to have a close connection, and it means that we work very effectively together. A lot of the stories you're going to hear today are about growth, remarkable growth in the context of the retail property industry in Europe, and we're very confident that growth is going to continue. Many of the anecdotes, many of the case studies, many of the drivers are almost unique to this form of retail property, and we're very pleased to have it within our group. And it's very important in the context of capital and resource allocation. We dedicate a lot of energy, a lot of effort, a lot of our relationship time to this segment of our business because of the powerful growth. So let's talk a bit more about sales density. Now, it's a way of measuring the success in retail, often quoted by US mall REITs, not so often quoted by European businesses. And that's often because sales density is important, but does not transmit quickly to rent in many cases. Here in outlets, it's different. The lease structure does allow us to capture growth in sales density quite quickly, and we may well hear a bit about that later on from some of the other speakers, which is why an 11% compound annual growth rate through the global financial crisis is very powerful and attractive to us, because we're capturing net rental income as a result of that sales density growth. The eagle-eyed amongst you will also notice that we kindly put a right-hand bar on this chart, which shows you that year to date, things continue to go well. We are in a closed period at the moment, with our results coming out in 3 or 4 weeks' time, but we thought we'd give you a little bit of an idea, a bit of a confidence booster that the amazing track record we've got here in value retail is set to continue during 2017. Now this slide is really about scale and valuable locations. Scale, as you can see, we have nearly £2 billion worth of assets deployed by Hammerson in our outlet portfolio. We have 19 investments, 19 centres. We believe we are the number one investor operator throughout Europe, measured by capital value. There is another business which is involved in our sector, which I'm not going to talk about. They have more GLA and they have more centres. We believe we have the best centres, which is why we believe we have the largest capital value across Europe. The locations are important, as you know, because they're near big cities. We look for wealthy catchments and also a burgeoning tourism trade, which you'll hear more about during the course of today. We've used this chart a number of times over the years. It's what we call the market opportunity model. It's a way of thinking about the outlet industry in Europe, looking at a hierarchy. So what you've got here is a segmentation of around 200 premium outlets throughout Europe. Not that many, and Richard Ching will talk a little bit later about the contrast between outlets and full price shopping. But for the time being, I just want to explain what we are doing here as Hammerson. We want to occupy as many places as we can at the top of the pyramid or the triangle and move centres up from the middle ground towards that top rung. As you can see, the left-hand side measures sales density. Sales density is very, very important because it draws in important and powerful brands, particularly driver fashion brands. So where you can get sales densities heading towards 30,000 euros a square metre, that is extremely attractive to our brand partners. Now, what we've tended to do within value retail is own A standard or A plus standard centres. In VIA, like this centre you are today, it's probably about a B to B plus, but through extensions, remerchandising, better marketing, which many of the colleagues this morning will talk through, you will hear how we can move up towards much higher sales densities. VIA at the moment, on average, is about 4,000 euros per square metre sales density. Value retail is about 15,000, Duncan. Is that about right? And you'll hear a bit more about sales density on the ground management during the course of the day. But the key point is we only want to be at the top of the green and the blue. So that's about a quarter of all outlets in Europe. It's an addressable market of between 50 and 60 centres. Now, how do we work together? I mean, many of you have commented over the years, this seems to be a bit of an unusual organisation. It's got 4 partners. You know, tell me what everybody really does and how does it all work? Now, the key thing is each of the 4 partners within VIA has its own specialism. It has its own knowledge base, its own network. And why I mentioned a couple of minutes ago about the 20-year relationship, it's a little bit of the glue that holds us together. We have very, very close relationships all the way through the business, and everybody has their own specialism and skills they bring to the party. And having worked in this industry for some years, some decades, I can tell you that this is almost unique, this relationship that we have, a very, very strong bond. And I'm convinced that we work better together than we would individually. And we can talk more about that as we walk around and as you hear us interact. But because of the knowledge each of us has and because of the relationship, there is enormous synergy. Now, what about the numbers? I mean, many of you are very analytical and you're interested in what does it all mean for shareholders. And I'm just going to step you through the chart on the left, really to display the enormous returns that we've generated for Hammerson and its shareholders. On the left, only around about 5 or 6 years ago, we had a modest investment in Bicester Village. And that was around about £200 million worth of NAV. Now, in the subsequent years, we've deployed about £400 million into that segment. But amazingly, it's delivered a fantastic return because of those sales densities, because of the relationship, and because of excellent execution by the teams on the ground. So you can see getting on for 3.5 times capital return and an IRR north of 25%. So as at the end of 2016, we had around about £1.2 billion of NAV invested. And looking forward, we believe that that sort of growth rates will continue. So very significant returns over the last couple of years and the opportunity to grow further. So the last slide from me is really about thinking about what's next. You know, what do the next 5 years hold for us in terms of Hammerson's investment in premium outlets? And we think the future's bright. There are 4 key drivers here. And if I start off at the top left, organic growth we think will continue to be strong due to the secular tourism trends and the attractiveness of this channel, this distribution channel to many brands. You will see going on the right that we have lots of extensions. We're talking here about value retail, and we're looking forward to an amazing extension at Bicester Village in only a couple of months' time. But we often extend throughout the portfolio, and in fact, the reason why we're here today is we celebrated an amazing extension only 6 to 8 weeks ago. Over to the bottom left, as you know, in VIA, our ambition is to grow a significant platform in that middle to high end of the market model. We have already 10 centres after only 3 years of operation, and we're looking to grow probably another half a dozen at least. Those accretive acquisitions, hundreds of millions of euros worth of capital deployment, again will provide us growth. Then finally for us, in Hammerson, we've long enjoyed a relationship with the founders, the owners, the stakeholders in value retail, and we think there is a good chance we'll potentially buy more stakes. So taken together, we think it will create further growth drivers for the Hammerson business. So thank you very much for your attention so far. That's just a brief introduction. We'll be around for questions in a moment. I'm now going to hand over to Richard Cheng.